What's good everyone, welcome back to another video. In this video, I'm going to share how I made over 8,000 US dollars on this gold long trade post NFP. I also posted this analysis and also my entry free of charge in my free Telegram. So do check it out in the description down below. Free of charge, free analysis, all in the Telegram. And if you want to see me break down my trade and my thought process, stay tuned to find out. Okay, so let's dive right into the trade itself. This is the gold chart. Okay, I'm just showing you on the 15-minute time frame so it's easier to see. But anyway, if you can see this clearly, just zooming out. On the 4-hour chart, we clearly have a change of trend. We were bearish at the start, but at the start of the week, we started to have higher highs, higher lows, higher highs, higher lows. So that means that the trend is right now bullish. So anyway, because we are just waiting for CPI, because CPI can, have a major impact on the markets, so we just wait for post CPI and just wait for whatever results comes out. So coming back to my Telegram over here, I told you guys this is totally free of charge. I post all my analysis, my thought process, and what am I looking for. Whenever a trade setup comes up, I will post it over here. And in future, I definitely will have a paid service. But right now, totally free. You guys can join, check it out. So anyway, before CPI happened, earlier in the day, I sent to my group what to look out for in CPI and some forecasts and what to do in different scenarios. So over here you can see, I mentioned that if CPI is above 4%, it shows that inflation is still sticky, and then DXY will probably go up instead of down, and all the XAUUSD pairs would definitely drop. Okay, that's if CPI is above 4%. If CPI is around 3.3 to 3.4, more ranging in the markets, DXY still will be bullish, and then all the XAUUSD pairs would drop. And last scenario is if CPI is coming in at 3.1% or lower, which it came in 3%, this shows that inflation is going down faster than expected, and so markets will price in the rate pause by the Feds for the FOMC the coming 2 to 3 weeks, thus leading to a DXY meltdown and all the XAUUSD pairs to go up. So I shared all of these 3 scenarios before CPI happened, and of course what we got was this third scenario. So once we know about this, of course we are anticipating longs for all the XAUUSD pairs, especially I was targeting gold, XAUUSD, because it's pretty nice to trade right after news. So based on the news itself, CPI is 3% lower than expected. Therefore, gold just pushed up right away. You can see on this chart over here. Let's zoom into the 3-minute. Okay, this was the 3-minute chart. Gold was around 1933 before the news. Once CPI came out, boom, it pushed up all the way to 1949. That's about 150 to almost 200 pips. Okay, but no FOMO, of course, we're not in a trade yet. We want to wait for a pullback, and because we know that inflation is lower than expected and also core inflation is down, which a lot of people are very worried about, because these things are lower than expected, this means markets would price in the rate pauses, and all these XAUUSD pairs would be very bullish even after the news. Therefore, that's what I expected. I expected a pullback first. We waited for the pullback, and then we started for a long. So on my Telegram, I was expecting a pullback to at least until 1940s. That will be an area of interest to long. Of course, well, price of gold did not listen to me, of course. It came down all the way to about 1941, just shy of 1940, which I was expected it to come into. And then we started to go back up from here. So just zooming into the 1 minute, because I love to trade on the 1 minute chart to get way better entries. I sent to my Telegram attempting this long on XAUUSD on lower time frame, did not go all the way to 1940 expected, and also finding some support over here. at 1942, worth the risk to reward here. And then of course, after just 1 hour, my main TP at 1950s was hit. This was a very nice 3R trade, 80 pips. I closed 50% and I'm still holding the rest of my trades. So how did I do this? How did I take this long with confidence? So going back to the chart. So at first, remember I mentioned that I was expecting price to hit back to 1940s because that was my key level on the higher time frame chart. Of course, it did not happen. And then we started to find some support over here on the lower time frame on the 1 minute. You can see price comes back down, breaks the low, but you can see it clearly. Zooming in a little bit. Look at the candle body and the wick. Price did not close below this wick over here. If a bearish candle closed over here, of course that's still looking a bit bearish and I wouldn't have looked for longs over here. But because of this, you can see it's something like a double bottom, which is a reversal pattern. Okay. The candle body did not close below this wick over here. That shows me that there's signs of bullishness and buyers are stepping into the market. And once we have done this, another confirmation I used was this Fibonacci 2. Okay, price push all the way up, retraced to the 0.5 Fibonacci retracement areas, held as support very cleanly. Okay, and my last confirmation was a break of trend line on the lower time frame. You can see price was following this bearish momentum on the lower time frame on the 1 minute chart, but slowly it broke above the trend line, broke this bearish trend line and retested it super nicely as well. Okay, retested this broken bearish trend line. So 3 confirmations. First, it pulled back, showed me signs of buyers stepping into the market because of the double bottom. Second confirmation was the Fibonacci 2. Retested the 0.5 Fibonacci retracement area. Okay, held as support. Lastly, it broke the bearish trend line, retested it as well super nicely. And of course, a break of this highs over here. That's my entry. I entered around 1944. Later, I'll just show you my trade history and stop loss of just below these lows because I know that I'm invalidated if a candle body closes below this 1942 areas. So it was a nice 20 to 30 pip stop loss. I was targeting my next key area, which is 1953, which I hit it pretty quickly in the next hour or so. Look at this price action. This is on the 1 minute chart itself. There were so many bullish candles forming, and of course this shows that there is huge bullish momentum. Therefore, no reason to close over here until my key level was hit. I took profits over here and I'm continuing to hold until further prices because I'm anticipating more downside on the dollar, and of course on gold it's the inverse. I expect higher prices to 1960s, 1970s. On Telegram, I did mention I'm holding the rest to 1960s to 1970s. I also showed the proof that I longed it at 1944s. Okay, and look at it. Just today itself, we have come up to the 1960s region and still going. So I expect a little bit more upside, maybe until 1970s, and then I'll fully close this trade. So simple as that. This is how I trade. No FOMO. I just waited after CPI. I did not pre-enter a trade right before CPI, which most people do, you know, because sometimes this news gives us whipsaws. It can stop you out quickly and then continue proceeding up. It couldn't. Sometimes it doesn't just give you a one-sided move like this. Sometimes it can wick you up. Let's say you're in a long, it wicks you up and then goes back up, stops you out for no reason. So what's the point of losing your profits, right? Or your capital for no reason? What you should do is wait after the news, let the noise settle. Even this is I just waited for the 4-hour candle close, which is around here. It closed around here, form some support over here. Once I find confirmation on the lower time frame, I enter. You know, no emotions, just pure technical analysis. You wait for the setup as expected. You know, I also already shared my plans for CPI, what are the different scenarios. So I already expected more upside on gold. That's why I took this setup. Simple as that. So if you guys want to learn more about this kind of stuff, more fundamental analysis, how I break down trades as well, and what trades am I going to take, I post this all on my free Telegram group. If you want, do check it out. I have it. The link is down in the description below. And I just want to share one more thing. So yeah, I want to share one more thing. Earlier in the week, on a Sunday itself, I posted this on my Telegram on Pound USD. I shared that there's a beautiful structure forming on Pound USD. It's very, very bullish. We're in the downtrend on the 4-hour chart for the last 2 weeks, and now we've broken structure, and now we are very, very bullish. So I'm expecting a retracement down to the gray box over here that I shared, which was the break of structure, and then I was expecting price to push up all the way to 1.33. I'm expecting Pound U to push up all the way to 1.300. So this is Pound USD's chart. Look at it. Price was over here at the start of the week, pushed down to the pit, to the gray box exactly, and then where does it go? It pushes right up to the 1.300 area. I actually shared this in my group. I did not catch the exact trade at the gray box area, but I took a long in the middle of this huge bullish momentum as well. Let me scroll down where I took that long. Okay, so over here, I took a continuation long on Pound USD. I did not enter right at 1.275, but I caught the last remaining up move. I mean, it's not done yet, but I closed a bit earlier because I didn't want to hold the trade to CPI. Okay, I took a long from 1.29 to 1.296. So that's about 60 pips. I raised about 20 pips, and that's a nice 3R trade as well. Very, very nice. So yeah, don't want to boast too much, but it went exactly as I expected earlier in the week on Pound USD. If you actually took that trade, so if you actually took this trade at the grey box itself, you're definitely up above 200 pips, that's insane, you know. Even if your lot sizes are low whatsoever, 200 pips is no joke. So anyway, that's about it from me. Hope this video finds you well. I'm expecting price to continue bullish because of CPI itself. It's the lowest CPI since last year, so there's a huge impact in the markets, and bulls are definitely on this one. So hope this helps you out. Remember, the markets are always here, but your capital may not. Peace.